Fed and NFP. After last week's central banks meeting in Europe, Canada and Japan, in the week ahead, central banks policymakers in the US, UK and Australia will get together to create another huge week. However, eyes mostly will be on Federal Reserve's earnings and on Friday's US NFP numbers. Last week's decisions showed that the central banks are getting a bit more cautious about their hawkish stance. Let's see what we have to expect from this week's meetings. Number one, Eurozone inflation. The Eurozone economy is already in a recession and ECB raised rates by 75 basis points last week. For the next meeting, we are expecting a smaller move, a 50 basis point rate hike to 2% in December. As inflation will be the main game changer for policymakers, we have to watch the numbers closely. In September, energy prices increased by 40.7% annually, and food category prices were up by 11.8%. Core inflation also raised by 6%. For October, we expect the headline CPI to increase by 10.2%, but core CPI can stay unchanged at 4.9% annually. Expected numbers will hold the pressures on EU stock markets. Number two, Reserve Bank of Australia. RBA was the first bank among the developed economies that started to slow down its tightening policies, and then BOC and somehow ECB also followed this way. After an unexpected 0.25% rate hike in the last meeting, and while headline CPI inflation surprised to the upside and reached 7.3% in quarter 3, RBA will have no choice but to continue the rate hike path by at least 25 basis points. This decision is supposed to put more pressure on OC. Number 3, Federal Reserve. We have nothing to watch on Wednesday but the Fed meeting and its interest rate decision, statement, and Fed Chair Powell's press conference. The market is already priced for another 75 basis point rate hike. Therefore, more than the decision, the statement and Powell's press conference will be important to see when Fed is going to slow down its rate hike pace. A less hawkish tone will boost the stock markets and increase the pressure on the US dollar and vice versa. Number 4, Bank of England. With headline CPI reaching 10.1% in July and then slipping to 9.9% in August and again increasing by 10.1% in September, the UK has the highest inflation among developed economies, and still there is no sign of cooling down. Therefore, we expect BOE to join the less hawkish club a bit later, raising the rates by 100 basis points, bringing the bank rate to 3.25%. This decision is expected to help the sterling, but will affect negatively on London stock markets. Number 5, US non-farm payrolls. The job openings and labor turnover survey, GLTs, showed job openings declining by over 1 million in August. However, the 10 million openings confirmed that demand for workers remains exceptionally strong. Therefore, a 200,000 expected increase in October payrolls showed that despite the weakened growth prospects, the labor market remains strong. The unemployment rate, which dipped back to a 50-year low of 3.5% last month, is expected to increase to 3.6% in October, and average yearly earnings are due to raise 0.3% over the month. Finally, number 6, earnings of the week. So far, almost 68% of the companies included in the S&P 500 index have reported earnings, and about 70% of them could beat the sales expectations. In the week ahead, Lilly, Pfizer, Toyota Motor, Uber, and AMD are due to reports on Tuesday. PayPal and Airbnb on Thursday, and Alibaba on Friday also will be the other most known companies to publish their quarter 3 earnings reports. Thanks for watching this video and hope it's going to be an amazing week for all of you guys.